should record for people who are not here. Well, we have a pretty good turnout. 1, 2, 3, 4, 5, 6. 12's pretty good out of 64, don't you think? Everybody's doing something. Yeah. Also, they think they're going to watch this video later. People won't do it. Yeah. But they mean to. And they're goofing off somewhere now. Yeah. Okay. Whatever. But other people are class, of course. So some will watch it. They're doing work or classes. Anyway, so number 1's fine. Let's do number 2. Okay. That. Why does it go away if you wait too long? Okay. Number 2. Using the accounting equation, fill in the missing amounts. And the key thing to know here is the first year of operations. What does that tell you the beginning balances are? 0. And the contributed capital is 35. So I know what contributed capital is, right? In each case. So let's do DEF. What do you need to do? How would you approach this thing? I'll give you something like this. You got revenues, liabilities, assets, net income or loss, retained earnings, expenses, dividends.
Figure out the assets first.
You could figure out the assets first? Or you could. But no, they already gave you the assets.
In DEF? You said DEF.
Assets are 150. Right there.
That's in A, B, and C.
You're looking at the company.
Oh, yeah, company.
Oh, I'm sorry.
Definitely. No. Let's not start with DEF. Let's start with DEF. Yeah, not DEF, DEF. Yeah, the first company. Let's do the first company. That's fine. Okay, let's do the first company. What do you think you should do? You know, you got. Do you guys notice that these account categories are in kind of a strange order, like having nothing to do with the way financial statements would be set up? What would be a really useful thing to do, you know, to help your thinking on something?
Write the equation.
Yeah. How about setting them up the way they go? There's a balance sheet. Gee, you didn't want me to do the first problem. I just almost did it, didn't I? Okay, anyway, yeah. Okay, we got this. We live with this. It's a balance sheet and income statement, okay? What if we wrote down everything we know and solve for what we don't know? You guys ever have a math class in your life? Ever solve for unknowns? Yeah. It's analytical decision making. That's all this is. So let's write down what we know, solve for what we don't know. What do we know?
Assets equals 150.
Okay, you can give them to me in any order. Just make sure you give them all to me.
Liabilities are 100. And we don't know our equity.
That's right. Keep going. What else do you?
We know revenue.
What else do we know?
Yeah,
where does that come out of?
It comes out of retained earnings.
Yes.
35.
So what would the 10 retain? What happens to retained earnings if they pay the dividend out? It's a debit because it goes down, right? I mean, you get so you think this way really fast, you guys. It'll work. Okay, so yeah, it's going to go down by 10. Now, there's one other piece, of course. What's the contributed capital? Yeah, don't forget that. Is it a debit or credit? It's equity. What is it?
Credit.
Credit. Good. So you get there really quickly. The other thing I'd recommend to you guys is don't let time go by in between. If I were taking a monster class like this, seeing as you all told me you don't have other hard classes today, is that your, well, whichever class, one of the classes said that. Do you have the hard class besides this one?
Well, I had one of your classes today.
Were they all hard? What do you got, econ and calculus or something?
Calculus, inorganic chemistry, environmental chemistry.
Oh, you're the science guy. You're just screwed. Yeah, that's just terrible. Yeah, good
It's my business minor.
Yeah, good education with a business minor. Wow. So this class won't be any worse than the other ones you're doing. They're all awful. Yeah, they're all awful. Yeah.
I haven't done
The rest of them have nothing to do. They told me to do.
I've done
True.
this class and
Nothing to do. You're just life of leisure except for my class. Yeah. Okay. Good. Well, that's where I'm going to treat it. Yeah. So anyway, I've had students actually come. You know, I have other classes. I'm like, really? Oh, yeah. I had no idea. That's nice. Yeah. Anyway, glad you got more than one class. That's credit, right? Because it's equity. Okay. So we've written down everything we know, huh? So then what you try to do is solve. Well, can you solve two unknowns at once? No. Huh. Oh, by the way, what's the beginning balance in every account? 0. So this started with 0, this started with 0. Assets, liabilities, and equity all started at 0, right? Revenue expense always start at 0 because you start counting a new year, right? Anyway, after you finish one, you start over. So, what could we solve? Is there anything we can get?
Equity.
I don't know the ending here, and I don't know the net income here. We get equity. How much is it? It's 50. Everybody see it? I got it. And if you put it in this kind of format, easy, huh? If you try to do it looking at it, it'll take you forever. You still get it, but it'll take you forever. Okay, what else do we now know? We know equity is 50. Let's keep going. Equity is a total of what? Yes. Oh, 35 plus some number, because we got 35 contributed capital, right? Plus some retained earnings is 50. What's the retained earnings? It's 15. It's got to be. I know ending retained earnings, don't I? Everybody see it? Stay with me? Well, now what do you know? If you start with nothing and you take out a dividend, this is my beginning balance, we'd say, huh? I take out the dividend with the debit, so now I'm negative. Oh, that's not really what happened. I earned and then I paid the dividend, probably. How much must the net income be to have an ending balance of 15? Aren't debits and credits wonderful? It's got to be what? 25. Net income is 25. So if net income's 25, net income's 25, right? Net income up here is 25. Now, careful. Is that a debit or a credit?
Credit.
That's a credit. Net income would be a credit. And by the way, that doesn't mean loss. That means credit, okay? Brackets for yeah.
Okay, I just have a quick question. How did you get the 15?
Okay, 50 is the total equity.
Okay.
It must be the total of the contributed capital plus the retained earnings.
Oh,
Because my equity is what people contributed plus my retained earnings, right?
okay.
I thought we did that today in class. Okay. Yeah, we did though, right? Okay, got it?
Yeah.
Okay.
So,
So you see where the 15 came from. And once you know the 15, what do you go ahead. Ask another question. Just try. Let's see what happens. Go ahead.
the 15, so you subtracted 50 from 35 to get 15?
Yes.
Oh.
Because contributed capital plus retained earnings is total equity.
Okay.
Right? When you do a balance sheet, that's what's going to happen. So if you know this number is 50, and you know this one is 35, gee, what must that one be? Right?
Yeah.
It's 15. You got it? Can't believe the questions you people ask. Okay, anyway, that's good. Both of you. Yes.
What happened to the 10 on the contributed capital?
There's no.
Started with 35, like you said, goes to dividend.
No, the dividend is taking some of the earnings out of the company, right? It's debit retained earnings, and if we're paying a cash dividend, it'd be credit cash. It has nothing to do with contributed capital. I'm not returning their contributed capital to them. I'm giving them some of the earnings. That makes sense?
Yeah, I think so.
Okay, so I might have said it wrong, but the contributed capital is 35, because that's what they contributed. Got it?
Yeah.
Later we will actually retire capital too, but like later. Okay? You can buy back the stock, right? Things like that. Treasury stock. Okay? Does everybody see so far then? Yes, ma'am.
Okay, and you got the 25 because you added the 10 and the 15. Yeah.
Well, I start with nothing, and I took out 10, which would make it negative 10, right? That make it a debit of 10. I got a credit of 15. How much credit do I need? 25. I got it by saying, 0 less 10 is negative 10, and I ended up with positive 15. It must be what? Positive 25. See, we can say positive and negative once we realize we're dealing with debits and credits. They just do different things at different times, right? In an equity account, credits increasing, right? Debits reducing. Asset account would be different than that, right? It's the opposite. Okay. Did that do it? We're there? All right, good guys. Well, now I have one more piece. What's the expense? What a joke, huh? It's got to be 205. Okay. Just like that. Everybody happy? Do the other one. Do muni. You and I. Do that one. Same exact deal. Look at that, it worked.
So the retained earnings was 10.
15. Oh yeah, you have to just copy them in. I guess I should have done that. Net income was 25, right guys?
Yeah.
Retained earnings is 15. There it is. Right? And expenses are 205. Okay? So I can leave anything out. So try number 2. See what you get. Muni. might think that you are learning a trick or something. It's not. The relationships. Okay? And it'll always hold. Right? It'll always work for you. This is just a sort of test to understand the model.
Already had finished.
Oh,
Working.
okay, right. You guys getting there? Done everything you know? Software you done? Should be really fast. There's only going to be one that has one unknown, otherwise it's going to be a very challenging question. Find the one unknown, what could have to be one of the answers to solve the one unknown and another one. So, you ready? What do we got, guys? Assets equals liabilities plus equities to your balance sheet. Revenues less expenses, your net income or net loss. And we already know from the last one we have both contributed capital work and with retained earnings. And everything starts with zero, right? So how much is contributed capital? 35 on both of them, right? Okay. What else do we know?
Retained earnings.
It's 180, right? Retained earnings is 100 at the end, is it?
Yes.
Zero at the beginning. True? Contributed capital is 35, started with zero. Expenses 180. And dividend 40. Did you do that right away? Okay. Then you solve, huh? What can you do first? I can't get those two. There's two unknowns. I can't get those two. There's two unknowns. What can I do, though? I can do two things here. What could I do? You get this plus this is how much? And I got that. Then what can I do? 180 plus 135 is 315. True? Okay, you got that there? Now what can I do? 0 less 40 came up to 160. Careful. Oh, it's got to be 140 added to the retained earnings. Has to be the net income. Make sense? You started with nothing. If you earned 140 and took 40 out, you'd end up with 100, wouldn't you? Everybody see it? And so net income has to be 140. So what does that make? That's a credit. Expenses are a debit. What does that make your revenue? 320. How many of you had it all? I'm a failure as a teacher already. Every time. Every single time. I just fail. So what got you? Lack of thinking, lack of practice, lack of working at it, not focused enough work. Are you just working problems and hoping it all works out okay? Just reading and hoping it works out okay? Uh-oh. I think you're all really nice people. I met a few of you a little bit outside of class. We're sitting in class. I'm really enjoying you. You want somebody to hire you? I'm just being nice, okay? I don't know what the hell you're doing. Everybody's nice. I get so much criticism. The secretaries over in the school business, you think everybody's a nice guy. And I do. I think you guys are great. I flunked some nice kids. There's still nice kids. I wouldn't hire them. Okay? So work. Make up examples and work them together. Over here, I guess.
Can you explain briefly how you got the net income? That's not as much of
Oh, for heaven's sakes. Okay, we'll do it again. Yeah. All right. I'll make a bigger retainer so you can see it. I'm just copying this, right? You couldn't see what I did. They start with nothing. You agree with that? It's the first year. In a later quiz and test, I'm going to have beginning balance. So you put it in beginning balance and go from there. Make it a little more complex. In the problem, they told you ending retainer is 100, right? I bet you net income's a positive number. You think so? Yeah, it's got to be. But I do know that the dividend, they gave me that too, right? Or I gave it to you, I guess I wrote it. 40, right? What do you think that number might be? 140, that's it. I wrote it, just called it. We good? Everybody happy? Easy, huh? Okay. It's kind of cool having these on videos because what can you do? Yeah, you can watch this one again, or better yet, watch one from another semester. There are a couple of them out there. And I covered exactly the same thing, doing it another way. You know, I always do it a little different. Yeah.
Okay, now how'd you get the revenue?
Okay, I did not know this one, right? I took my 140 net income from here and put it there, right?
Yep.
You knew that. I already knew the 180. So if you know this one and this one, can you solve the other piece? See it? I know this is 180. And I know that's 140. What is this number? It's got to be the two added together, right? A credit balance of how much? Some number less 180 is 140, is what we're saying. Got it? So how much was that? The two added together, of course, right? Good? This will really gel those relationships for you. You get it. All right. What is credit? Sorry, everybody. You know, every once in a while somebody misses it. The brain freeze or something. That'll be you, yeah, okay. And then I wondered, do they really not know? Okay. People do screw up the accounting equation. That's hard to believe. Okay, number 4. How would you approach this? On January 1st, 20A, 3 individuals invested $100,000 each. Be careful, it's each. How much got invested? 300,000, not 100, right? Read, think, right? Ask questions, okay, when you're working, right? Okay, what really happened? So 3 individuals, 100,000 each is 300,000. By the way, I hope you don't find it insulting when I say think. I tell myself that all the time. Every time I make a mistake, what are you doing? Concentrate, pay attention, right? So tell yourself that. You know, I'm missing stuff I know how to do. What is that about? Concentrate, right? Okay? Pay attention to it. And get lots of rest and eat well. And eat good food. And get exercise. That's going to happen. I don't know, not that this guy that's doing a minor in business or whatever it is. He doesn't get to sleep. No, that's out of the question. You're young, you can destroy your health. Don't worry about it. I did. I'm really 35 years old and look what it's done to me. Yeah. So, question right there.
For number 4, are 28 and 20 each?
Our 28 is a year and 20B is a year. It's supposed to be years. 2000 whatever, 2000 whatever. Does that help? Yeah, okay, sorry. So January 1st, 28, 3 individuals invested $100,000. What would that journal be? Debit cash?
Yeah,
Debit cash.
300,000 credit? Contributed capital, 300,000. You guys know that, don't you? Right? That's what it is. It's equity. Okay? They had total revenues of 30,000 in 20A and 45,000 in 20B. That'd be the revenues, right? Total expenses for the same period, or for the periods, were 22 and 33. That's their expenses. Cash dividends were 4 and 6. What was total stockholders' equity at the end of 20A and B? You know what? I think if I knew what contributed capital was and I knew what retained earnings were, I could add the two together and get total capital. You guys aware of this? Did you know this? Same thing over and over. And after, you know, we go through about 5 or 6 chapters, we'll quit writing this down all the time. It'll still be the same thing, right? It'll just be we know it, you know, so. All right, so what I want to know is contributed capital and retained earnings, okay? Make sense? I don't really have to mess with the assets and liabilities here. What do I know? Year A, and year B, okay? Let's do it. Way to go, Keith. Year A and year B. Okay, how much contributed capital is there? So we got 300,000 here. Everybody agree with that? What would I start with retained earnings since they just started the business? Zero. Okay, so I got 300,000. My equity is going to be contributed capital plus retained earnings, isn't it? You guys know that, don't you? And all this is fresh. You just learned it. But here's the deal. I know it's totally unreasonable to have you do a quiz on Friday, but I'm getting you to work really hard on it.
Yes.
And what's going to happen is then by the time we get to a test, you won't just study a day or two for the test. You'll have studied a long time for the test. And what really determines your grade is the test and final, okay? Quizzes don't mean much, right? They just don't. People who screw them up, you know, they won't have time to study for them. They'll be off at an athletic event. You know, something will be happening. So relax about the quizzes. Just do the best you can and keep working, right? You're really studying for the test. Yeah.
Why did you credit the?
Oh, for crying out loud, what kind of account is it? It's an equity account. Your contributed capital plus your retained earnings is your equity. Your wealth is what? What is given to you, your contributed capital, contributed to the corporation, right? They invested in it. Plus their retained earnings. Put the two together.
I was thinking.
So, and they're on the right-hand side, right?
Yep.
In the accounting for you. So what must they be?
Credit.
Credits is on the right-hand side. You always go back to that.
That's good.
Yeah, well, it is. We have 300 over here too, right? Cash. And we have 300 over here in equity. Debit, cash, credit, equity. Yeah. And, you know, there's going to be, cash is going to come in and go out, come in and go out, but equity won't change. Contributed capital won't change it unless you issue more stock. Makes sense? But you start that way. So that's good. And it's hard to separate those, isn't it? Right? Study, oh, it's an asset. Well, yeah, it was. So you spend it. Right? Doing something. Okay? So that's good. All right, so what do we know, you guys? We know revenues were how much in each year?
30 and 40.
So this one was 30. This is 45. Those are credits, right, guys? Because we could lose money. Credit balance. Brackets being credit, not minus. Okay, and then expenses? 22 and 33. I guess they didn't lose any money, did they? What's net income in the first year? 8. What's net income in the second year? 12. Okay, now that's pretty easy so far, although you had to do a lot to get down to these answers, didn't you? So what happens? Oh, there's dividends too, aren't there? Okay, so I've got a dividend for year 1, dividend in A, right? And I have net income in A. Wow, what's net income? 8. How much do they pay out in a dividend? 4. Would you agree that net income would increase equity? It's a credit?
Yes.
Would you agree that a dividend reduces equity? It's a debit?
Yes.
Yeah. So what would it be in my ending retained earnings at the end of the first year?
4,000.
4. What's my total equity at the end of the year? 304. Okay? So 304 for 28. Now here's the deal. You start over on the income statement to start a new year, right? But you don't start over on contributed capital and retained earnings. Let me ask you this. Do all of your assets go away because you start a new year?
No.
So on January 1st, every one of your possessions disappears, right? December 31st midnight. Of course not. You still have your assets. Wouldn't it be cool if your liabilities went away when you started the year?
Yeah.
I'd borrow as much as I possibly could all year, and then at the end of the year I'd say, oh, well, you get it paid back. I don't owe it anymore. Nah, nobody's going for that. So your liabilities don't go away when you start a new year. So therefore, does your wealth go away when you start a new year? So have all your assets, all your liabilities. So your equity stays, right? And it keeps accumulating, hopefully, going up, right? Maybe go down. Okay? Right? What about your revenues and expenses? They don't really go away. What we do is we add the net income. expense. So the revenue expenses are temporary equity accounts. It'll help after we do chapter 4. Okay, so what happens the second year? You start with 4, don't you? Right? 4 is the balance. At the end of year A, how much did you earn? Net income in B is how much, guys? 12. That makes it 16, huh? But what did they do?
6,000 in dividends.
They paid a dividend in year B of 6. Guess they're paying half their earnings in dividends. Interesting company. But anyway, so what happens? 4 plus 12 is 16, less 6 is 10. So that's the ending retained earnings is 10, right? And what do we have? 310, right? You still have to contribute capital, of course. So 20B would be 310,000.
So you add the 12 and 4 together and you minus the 6, like you did it.
Yeah, because remember the net income, the 4 is your beginning balance. Here's the deal. You started with nothing. You earned 8, so you have 8 retained earnings. You decided to pay 4 out to the owners. The owners decided to take it out. It's theirs, right? So then there's only 4 left of equity, right? Or of retained earnings, rather, right? Then you earn 12, so you have 16. And then you pay out 6 of it, so there's 10 left. True? It's common sense, isn't it? You get to the point where it's common sense, you won't miss anything. Was this a hard problem? 2 points? You bet. You bet. To go from scratch if you've never seen it before. Maybe. But after you know what you're doing, it's easy, isn't it? Did you notice I worked this exactly the same way I worked the problem right before? I know the model, don't I? You can do it, you can take any approach you want, I don't care. But why not, huh? You got a balance sheet and income statement here. All right, let's try another one. What do you do in number 5? Abrams Corporation reported the following amounts at the end of the first year. They have contributed capital, sales revenue, assets, dividends, and liabilities. What's retained earnings and total expenses? You know what? This is number 2 restated. It's just written in a paragraph. It is the same model, right? Because it is the model. It's a balance sheet. You know, you can do millions and millions of transactions, and it all ends up being sometimes like this, okay? You won't say assets, you'll list a whole bunch of different assets. It's total, it's the same thing. Liabilities, the same thing. You fit everything on one page, though. Assets and liabilities and equity on one page, or maybe 2. You might have assets on one and liabilities and equity on the other. Really? I mean, no matter how many you have, right? Nobody uses more than 2 pages, right? And then revenue, expenses, and net income, income statement, that's going to be 1 page. Millions of transactions. Just add them all up, right? People don't want more detail just because it gets big. The numbers just get bigger, okay? All right, anyway, so what we want retained earnings and expenses. So if they told me, I know I want that, and I know I want retained earnings, so I guess I need contributed capital and retained earnings, huh? I want the ending retained earnings down here. That's the other one I want, okay? It says this is their first year, so they start with nothing, right? You guys agree with that? All the accounts start with nothing. Okay, contributed capital is 40. That's a credit, isn't it? Sales revenue is 180, isn't it? That's a credit. Total assets are 130. Dividends are 5. Same problem, isn't it? Total liabilities are 80. You guys solve these? What's equity? I can't do these 2 because there's 2 unknowns. I can't do these 2 because there's 2 unknowns. 30,000. So yeah, 130 less 80 is 50. If equity in total is 50 and contributed capital is 40, what's retained earnings? 10.
So net income was 50.
You got it. Net income had to be 15. If you started at nothing, you must have earned 15. If you took out 5 as a dividend, you still have 10. Right? So net income is 15. So what does that make expenses?
65.
165. What's really interesting is people will get the first problem right, number 2, and then they'll miss this one. How could you possibly do that? Oh yeah, I think number 4 is harder too. Because you have to do several years and that one. Okay. This is just like part of number 2 was, huh? Right? So generous. Okay, then we got something a little different. which is beyond where we're at right now, which I always like to do on quizzes. The accounts payable account has a beginning balance of $1,200. We purchased 8,000 in inventory and credit during the month. The ending balance is 1,900. How much do we pay our creditors during the month? That would be a really neat thing to do. Everybody's got a copy of that now, don't you? Isn't it far better to work it if you have a piece of it, a paper sitting in front of you with the questions on it?
Yes.
When you go to work, go prepared. When you go to the meeting, if your boss sends you an agenda for the meeting, read the agenda and bring it with you, with your notes written on it. Especially early in your career. Later in your career, you won't write anything down, you know what you're going to talk about. Early in your career, you make a bunch of notes. So when you go to the meeting, you can ask questions, right? Make comments, offer inputs. If you don't talk, they think you don't know anything. 75% of the people in the world are extroverts. Only 25% of us are introverts. Talk. Talk. So what do you do if you're an introvert? Know what you're going to talk about. And then you're far more valuable than the extroverts because the extroverts just talk about anything. How many extroverts in here? People like this. What it is when you recharge, you want to be with people. After you sleep, you want to be with people. Introverts, when you recharge, after you sleep, you want to be by yourself for a while. So, extroverts. Introverts. Don't know. Take the Myers-Briggs thing. You go on the computer, take Myers-Briggs, and it'll tell you who you are. It's really fun. Anyway, and then it's like the horoscope. But still, there's useful information in it, probably. Especially if you're extreme like I am. So, I'm a real introvert. So what do you want to do this one? We're not going to use the whole balance sheet and income statement. It's one account. What would be a good idea to do for one account?
Make a journal entry for it.
Well, we can make the journal entries that they did, except there are no journal entries. They didn't have any transactions. Oh, a T account. That would be a really cool idea. I like that, right? And then we'll show where we're at and what we don't know, right? And they are journal entries, except we don't know quite what the entries are. We do one. They purchased inventory for $8,000 on credit. What's that journal entry? So we can do that journal entry. This is going to be accounts payable. Don't say cash for crying out loud.
Oh, sorry, no, I didn't mean to say
He's
cash.
going to flunk out of all this physics and chemistry stuff. Yeah. So what do you think? What is it? $8,000 of inventory on credit. What did they get?
They got $8,000 worth of inventory.
Which is merchandise inventory, which is an asset, and you have more, and so therefore you get debit. Simple little model now. Merchandise inventory debit, how much? 8,000. What would we credit, everybody? Yeah, the part we care about, because it's on account, isn't it? So we know that 8,000 got added in here. So yes, you are doing the journal entries. I agree with you. Okay, there's a purchase. Okay. What else do we know about inventory?
You originally owned.
Beginning of the year, 1,200. So my beginning balance, would that be a debit or a credit, by the way? Credit because it's a liability. You know that, right? Okay. And then they gave me the ending balance? Didn't it?
Oh,
19. Is there anybody in the room that cannot calculate that number? Of course not. Nothing to it. What is this number going to be, by the way? It's 7,300. Okay. Because 1,200, it went up by 700, so you paid 700 less than bought, right? Bought 8,000, I paid 700 less than that. True. Just common sense. What happened? What would the journal entry be for that? You think? I think it's debit accounts payable. How about you guys? That's how, they wanted to know how much was paid to creditors. That's the payment, right? Debit accounts payable. If I asked for the journal entries, it'd be no big deal, right? Credit what? What do you pay people with?
Cash.
Cash. Debit to accounts payable reduces it, right? What does a credit do to cash? I think it decreases it. What happens to your bank account when you write a check and send it to somebody? It kind of decreases it, right? Common sense. So that one wasn't hard either, was it? None of them are.
problems like this, do you want like an entry separate?
No, if I only asked for a dollar amount like that, you would just give me the 7,300. If I asked for the, what journal entry would record it, that'd be that. Just watch what I asked for. Okay, or what entry recorded the purchase is that. I could ask for both, I suppose. Okay, so different ways of asking the same thing. Okay, number 7, I guess, huh? right along. So what do you think? The sale of service to customer on credit would have what effect on these? You know what I don't like about those accounts, again, those account types? They're not in a logical sequence, so what would you probably want to do? Rewrite them in a logical sequence. Always do that. I bet you do that in physics. Taking physics too.
I haven't had physics yet, actually. I'm taking this one.
Chemistry. What do you have for chemistry?
Right now I have Dr. Fallis. She used to be Dr. Burns.
Okay. Yeah, you don't learn it. I know Sinsky better. Yeah,
Oh, I have Sinsky as well.
Yeah, he's a crazy guy.
Oh, yeah. I love it.
He's good. He's a bright guy.
Yeah, he is.
Yeah, he's a good guy. So anyway, what do we do here? Revenues. He'll work you. Really good faculty here. Okay, so assets equal liabilities plus equity, revenues plus expenses, net income, of course. Okay, anyway, so it's the same accounts, right? They're the same types of accounts. It's just in an order that makes some sense for me, okay? So what happens here? If I knew what this journal entry was to record this, I would know what happens, because I can't write the journal entry unless I know what happens. True? So if I know what happens, I know what happens. So what is it? Sale of services to a customer on credit.
You get an accounts receivable.
They owe you. Accounts receivable is a receivable from them, which is a
Asset.
asset. I have more. What do you want to do to it?
Debit.
Debit, increase it. Absolutely. That's all there is to it. For whatever the amount is. Credit what? Oh, I sold services to a customer on credit.
Are we answering that question or are we making journal entries? It just asks if it takes
Oh,
specific.
yeah, I'm writing the journal entry so I know what happened. You don't have to write it down. You can do it in your head if you want. I don't care.
I don't get the journal entries.
All I'm doing is I'm recording what happened. We got this general ledger, which is envisioned as being a whole bunch of key accounts, one for everything to keep track of, from all my assets, liabilities, equity, revenue, expense. It's really, of course, a computer file. You do right, right, keep track of that and credits and facts. But anyway, what I'm going to do is every time an asset goes up, I'm going to debit it to reflect that on my general ledger, and therefore, I'm going to copy what's in the general ledger on my computer does it for me. I can look at the balances. So let's say I start with no trucks, and I buy a truck for $100,000. I would debit trucks $100,000. I buy another one for $100,000, I debit it for $100 again, and now I have two trucks. Total cost me $200, and I just keep going. I just keep adding up. You getting there? Right? But there's also something I gave up on the other side. If I buy those trucks, I keep debiting trucks and crediting those payable, or debiting trucks and crediting cash, right? So I do both sides. And I keep changing the accounts for that. And then when I total up the accounts at the end of the period, that's what goes in my financial statement. That's all there is to it. Could be millions of journal entries in that. Make sure your debits equal your credits the whole time. Did that answer it, or is there more?
No, I didn't.
Okay, all right, good. So the reason I'd write this down is because if I know how to record it, I know what happened. Right? I do, because I just increased an asset. So guess what? It's going to increase assets by whatever that amount is. Right? But what do you want to credit? If you know the credit, you know what the other side did. Because, obviously you could debit an asset and credit a different asset. You could debit an asset and credit a liability. You could debit an asset and directly credit an equity account. Oh. You could debit an asset and credit revenue. You could even debit an asset and credit an expense. I could think of examples. No kidding. So you have to figure out what they did. What they exchanged. They provided the services to their customers. Why would you provide services to your customers?
So you can get their money.
So you get their cash later.
Yeah.
And that is how you what? Make revenue. You earn revenue. You got it. So guess what we call this revenue? Seeing as the services. How about service revenue? Could be gardening service revenue, CPA revenue, legal revenue. Got the idea? Could be even interest revenue, all kinds of things. Okay? Whatever you earn. Rental revenue. Everybody good? Making sense? Okay, so what does that do? Well, credit to revenue does what to it? Why do we credit it? Yeah, because we're increasing equity through revenue, aren't we? Right? That's true, isn't it? As I increase my revenues, this went up, which makes net income go up by exactly the same amount, which makes which account in equity go up? The earnings that I captured and retained. Ta-da! Right? And you see we stayed balanced here? What happened to liabilities? There is nothing in there that is a liability. Nothing happened. What happened to expenses? Nothing happened. So no liabilities, no expenses. Now, can you answer those questions? Easy, huh? So you guys do 8. Same sort of thing. This is a good use of an hour of your life, isn't it?
I already did it when I came here.
You have them all right?
I've had everything right so far.
Oh, you're wasting your time. Good.
Nah,
You
it's not
reinforce
wasting.
it.
You need practice.
Still reinforce it. That's right. Yeah. You know, I taught a seminar once on chemical management. Like I have a whole class on sometimes what the discussions were. But it was horrible. I was a new professor, and I was trying to make a little bit extra money because they were paying me nothing. And I started doing it for the State Society in Washington. I was doing these seminars. And I thought, well, I'll do something unusual. I'm going to do cash flow management. And it was supposed to be intermediate level. Kids that were sophomores in college, juniors and stuff, right? These are professionals doing cash flow management for their clients. They were angry. They were just pissed. It was 2 days. And I had to cover the material, right? Because it was AICPA, the American Institute of Certified Public Accountants material. I was paid to cover it. So I was covering all these things. And I brought a bunch of extra stuff, luckily, because it was so bad. But anyway, at the end of the first day, I got walked up. He said, you know, all these people are playing fishing. They're not enjoying themselves. They're pissed that they have to be here for being professional education. They already paid for this. They're not learning anything. And he said, you know, Keith, I have learned 2 things today that I'm going to use in my practice. And he said, you know what my practice is? I said, what? Cash flow management. I manage cash flows with companies who are at risk of bankruptcy, trying to keep them from going bankrupt. He says, I've learned 2 things today that I'm going to make a lot of money with. He says, you know, most of these other people haven't learned a damn thing. Because they thought they already knew what? Everything. Do that. Right? So if somebody's covering something you already know, what do? Sit there and listen and see if there's anything else. My auditing class, I don't know why they come to class. They know how to read by now. We were talking about it today. They know how to read, they know how to study. It's a part of a little class. They don't need me at all. What if you could get to the point where you didn't need professors, you could just read the book and tell it? Wouldn't that be cool? It's called graduating and going to work, huh? Cool, huh? And as your career progresses more and more and more, you learn from yourself. You learn from doing it. It's really neat. If you ever do a PhD, if you're stupid enough to do that, no common sense. If you ever go do a PhD, a doctorate, you're going to try to find new knowledge. That's what you do. Or they don't call you doctor. Right? You're going to find a little tiny piece of new knowledge. So, yeah, so I like that. That's good. You're here. Yeah.
I have to go, but could you tell me the numbers, number 10?
I don't know what they are yet, but you can watch the video. You can go to the end of the video and find it. It'll be there. Yeah, we'll do it. Yeah. Okay. All right, get that. So what'd you do for number 8, guys? You got it? You know what it is? Tell me what the journal entry is, and you got it, don't you? You don't have to write this down like this, of course. You can just go straight to this. You know what's funny about it, though? If you don't write it down like this, I'll have people look like they knew what they were doing and still miss one of them. And they don't pick up this piece, maybe. Right? So I don't remember what the answers are. Sorry.
No, it's all
Borrowing cash from a bank would have what effect? What would you debit? Cash. What would you credit? Not accounts payable, really, notes payable. Yeah. What does that do? Cash is a asset, that's why you debited it. You have more. What does the credit notes payable do? Liability, you have more. What happened to equity? Nothing. There's no equity in there. Revenue? Nothing. Expense? Nothing, which is one of the reasons equity has nothing. I'm done. I could give you any kind of journal entry, couldn't I? If you know what the journal entry is, you know what the effect is of the financial statements, okay? All right, so should we do 8, or 9 rather, and then 10 as well? Okay, see you later. Let's do them real quick, the ones we already did. What was 8? Borrowed 4,000 cash. Debit cash.
credit accounts payable.
Whoops. Well, note payable. Nobody's gonna give you $4,000 without a signature on
Yeah.
something, right? The way to think about it. So it's gonna be a note payment, where you're gonna sign a note. Everybody follow that? All right, how fast could you do that transaction? What, 10 seconds? 15? You know what you're doing? This is not a hard quiz.
On
Yeah.
testing quizzes, are you gonna tell us, like, if it's a note or if it's an account?
Of course not. Let's say, what if I say that they bought it on credit? It's an account payable. What if I say they bought an open account? Accounts payable. What if I said they signed a note?
So, I know that, but sometimes if it just
What
says
if-
borrow.
What if I say I went to a bank and borrowed it?
Okay.
On account payable at a bank? What kind of bank do you go to? They never trust anybody. Yeah, so,
Okay.
yeah, no, that would always be a note payable, right? Or a contract payable later. Just like a car loan.
Yeah.
Isn't really a note payable, it's a contract payable. We'll talk about that stuff later. Does that make sense though?
Yeah.
You have to use your judgment though, okay? Question? No? Okay. All right, what's B?
Credit line.
Yes, ma'am.
Yeah, I do have a quick question. So everything is a liability besides contributed, capital, and retained. Like, I know what an asset is, but everything else, like.
No, everything,
No.
no. Everything I owe somebody is a liability, no matter what it's called. If I owe something to somebody, it's a liability, right? Obligation. Assets are my possessions,
Yeah.
no matter what they're called. They're my possessions, things under my control that are of value. Okay? Liabilities are what I owe against those, right? And equity is the difference between the assets and liabilities, right? Sometimes called bad assets. Okay? And it's a representation of my wealth. My wealth consists of contributed capital plus retained earnings. That's what everybody gave you plus what you earned in capital, right? That's your wealth. And of course, your liabilities plus your wealth have to be your assets, right? All your assets, either you own them or you're still paying for them. Did that get there? Okay. So don't do that exclusion type thing. Just
Okay.
do what they are.
Okay.
But if the word payables on it, probably liability.
Okay.
Every single one doesn't have the word payable on it, but all the ones like you do, no one's so fun, right? Assets will just be the name of it, but it's equipment or building or whatever. Okay, inventory, accounts receivable, so they're pretty straightforward. Okay. Put the word payable on it, you get a liability. Put the word expense on it, you get expense. Put the word revenue on it, you get revenue.
Okay.
Usually, although there's something called unit revenue, which is a liability. We'll worry about that later. Yes.
Investment, is that asset?
Okay, now, if I invest in another company, I would debit investment credit cash. That's an asset. If the owners invest in my company, now the company gives the cash, right? Debit cash and credit owner's equity. So the investment, when our owners invest, that's contributed capital. When we invest in a different company, that's investment. And we'll get to that. Okay, so that would be an asset, right? My stock is equity. Somebody else's stock is an investment. That work?
Yeah.
Okay, good. Okay. You know what's funny is if I have an account receivable from you, you have an account payable to me. I have an asset, you have a liability, right? We're different companies. Got it? Same principle. B is owners invested land worth $10,000 in the business in exchange for stock. What was it?
Slant?
Yeah, they got land, and then we thought contributed capital, right? Because we have more equity, more asset, more equity, right? What was C? Yeah, we bought equipment for $900. Wouldn't you debit equipment? Uh-huh. Because we have more. It's an asset, debited. What did we give up? Cash. So we credit cash for $100 with it. Okay, everybody good?
Notes payable.
We got to have the same balance, which I tried not to do in one class. Notes payable 800, so it balances, right? Yeah, and I signed a note. So I exchanged equipment for cash and my promise to pay later, right? That's all it is. D. Purchase supplies on account for 300. What did I get? Supplies inventory for 300. I'm going to pay them later, so it's a account payable on open account, on credit, right? Almost always supplying something small like that would be on account, right? They just trust you to pay them later. Okay. All right. E, delivered flowers to customers. I'll try not to screw it up this time. Okay, totaling $800. So what do you want to do? What did we get? Hey, they paid us what? 600? What's that? Debit. But I sold them how much? Which we call what? Sales? Sales revenue. Well, then not 800 of accounts receivable, but we have accounts receivable. If I sold them 800, right, that's the revenue, and as I increase that revenue account, I am increasing my equity, right? Because my net income's going up. It's a temporary equity account. Everybody agree? Okay, so what's the 200? They only gave me 600. So that's the account receivable, which is what kind of an account? Somebody owes me money? It's an asset. So I have two assets. They gave me 600 cash, 200 of their promise to pay me later. I've got two different assets I received, debit them both, and I record the sales revenue. I have more wealth because of this. Here first, I think. Go ahead.
If you're doing like this and you have three lines, and you came back and let's say for the account receivable, could I have cash, then sales revenue, and then account receivable?
I'll draw an arrow and say, please put the debits first and then the credits.
Okay.
So, by convention, we always put all the debits first and then all the credits.
Okay.
It's easier to read, I suppose.
Okay.
Yeah. I prefer, so what I would do is I'd leave room. Okay. If you want to do the credit first, great. Leave a couple lines. Okay. Yes, ma'am.
Did you ever put the accounts receivable as a credit, like if people don't pay cash? Like as a liability?
Well, accounts receivable would have a credit balances when they overpay you. If they owed you $100 and they pay you $500, you now owe them $400. But it's not an account receivable anymore, it's now an account payable.
Like with the,
But the answer is not our account. No. And you need to talk about it. Especially if you're going to sit along this way. Because you're a delightful young woman, and they'll all think you're a delightful young woman instead of a powerful business person. I don't want to change anybody's personality. I want you to be aggressive and know you. Okay? You don't have to be all the time. Just when you're talking in front of a group, or in a meeting or something, you project. Okay? So work on it. Work on it. And please don't do that around your parents and your grandparents. They'll think something happened to you and you're nuts or something. Yeah, that'll fit. Yeah, it's really important. Really important to project. Okay? Don't your speech teachers tell you that? Yes. Just let me make my speech and leave me alone. Yeah, I know. I got it. All right, let's do F, huh? Good questions, you guys. Paid 500 in the note payable from B above. It wasn't B really, I guess, whichever one it was C. Plus $8 interest. So what do we do?
Account payable.
That's a note. He's going to miss all those. That's going to be fun. Okay, anyway, we'll laugh. Okay. Debit notes payable for how much? 500, because that's how much we paid off. What does a debit do to liability, everybody? Reduces it. What happens if you pay off the liability? It goes down. So, of course, you debit it. Why are we debiting it? Because liability is on the right-hand side of the accounting equation. And right and credit mean the same thing. You increase them with credits, you reduce them with debits. Always go back to that. What else happens?
Interest expense.
Oh, I'm going to have interest expense. It's how much? $8. How do you know it's an expense? I used it up. Now listen to this carefully. I borrowed the money. The cost of borrowing the money is the interest. It's a cost I incurred, right? I used the money to buy a piece of equipment or something, didn't I? The note. I'm using the equipment to do what? Generate revenues. What's one of the costs of generating the revenues? The interest that I paid to get the money to buy the piece of equipment. Make sense? So any cost you incurred to generate your revenues are what? Expenses. So it's interest expense. Everybody got it? Okay. And then what's the 508 credit? I get cash. That's it. Okay. Easy, huh? Okay. Pretty easy. Let's do G. Paid for the supplies purchased in D above. Okay, how much were the supplies, gang? 300. I'm going to pay for all of it. Okay, what am I paying off? I don't no longer have the accounts payable, huh? You paid it. I credit accounts payable when I borrow the money. What do I do when I repay it? Debit it, of course. So you debit accounts payable. For 300? And what would you credit? Would you give them? Cash. Oh, man. It's just too easy once you understand it. It just keeps going, right? all kinds of different assets, liabilities, equity, revenue, expense. All right, let's do H. Received 100 of the amount owed by customers for the flowers. Okay, so that was the account receivable here, right? That 200 accounts receivable, they gave me 100 of it. Do they owe it any more if they paid me? Of course. And what they give me? 100 of cash. So what do you want to do if you have 100 more cash? 100 more of that asset. Debit cash. Sure. What are you going to credit? What don't you have anymore? So here you just exchanged two assets. That's it. What do they owe you now? You think about accounts receivable.
100.
Yeah. I put 200 in it with the first entry. Now I take 100 out of it because they paid me. How much do they still owe me? I think it's 100, of course. It works perfect. Getting there? Okay, good. I hired an employee agreeing to pay her $150 a week starting next week. $150 a week. Oh, wow. She didn't have to work very much. So what's the deal? No entry. Why? I haven't done anything yet. She hasn't worked for me yet. I haven't paid her yet. I don't owe her yet. I didn't pay her in advance. Nothing happened. No entry. Just no entry. Nothing happened. It's nice. I hired her. It's great. So she's going to generate a lot of revenues for us. I might work for an hour for that. Oh well. You guys would probably work for longer than an hour, huh? For $150. Yeah. Keep steady. Keep steady. Keep working. It pays out. Huge. And then after you graduate, keep working too. Don't stop. I don't know how to do a J apparently anymore. J. All right. Meet my grandson. The new employee, my granddaughter's two now. And my new employee in A, or I rather above, has now worked for 2 weeks and is paid for 2 weeks' work. Okay. What is that going to be? 150 twice? 300? Of what? Yeah. What do you think of salary expense? She did the work. She's trying to generate revenues for me, right? Working, selling stuff, or delivering stuff, or doing something for me, right? Cleaning the floor, I don't care, right? She is working for me, and the reason I hired her is to generate revenues with her work. True? So this is a cost of generating revenues, and he thinks it's an expense. And seeing as it's salaries, what would be a really good name for the expense? How about salary expense? If she's getting paid a certain amount per week or month or something, it's salary. If she's getting paid by the hour, what would it be? Wages. Just like, because that's what they are, okay? So either wage expense or salary expense. So this would be salary expense. How do you increase expenses? All of them. Why? Why is it a debit? It's got to be opposite of revenue, and what do expenses do to your equity? Brings it down. So as I increase the equity, my net income's going down. Okay, you guys, we're going to be like a crazy. Really do have to think about this a while before you get it. Once you do, it's kind of like, oh man, I can do this. Okay, what's going on here with this thing? Right? What's happening? Yeah, we incurred an expense. How does this work with equity? These are debits over here, right? Increase with a debit, reduce with a credit. These are credits over here, right? So I increase with a credit, reduce with a debit on this side. Here I increase with a debit, reduce with a credit, right? Revenues increase my equity, so what do they have to be? They're going to be credits. You put too much in, debit. Expenses have to be the opposite, you're right, okay? So it's got to be debits. But why else does it need to be a debit? Because it's reducing equity, right? As I increase the expense, I am reducing my equity. Because my net income's going down, that'll give me less equity, huh? Less retainer. Everybody getting it? See how those fit together. So in J, we paid him, so what do you want to do? Take her debit salary expense. Be a really good name for it. And it's a debit because it is reducing equity. Yeah? 300. Credit what? What if I was going to pay her later? Not account, probably. Salary payable. Probably called salary payable. Okay? What if I paid her in advance? Last month I would have debited prepaid expense and credited cash, and then this month I debited salary expense and credit prepaid expense. And you don't have to know that yet, but we'll be able to do that. It's called a deferral of expense. Recording the payable would be called an accrual of expense. This is a cash expense. All right, so it's easy. K. What's K? Paid rent for it. This month. It's this month's rent. What did you pay it with?
Cash.
Credit cash? How much? Debit, why do you so many 300s? I don't know. Debit 300 to what? Rent expense. It could be payable if you accrued it last month. If last month you had debited rent expense and credited rent payable, and then this month you're paying it. But that's not what it says, right? It's paying the rent for this month, not last month. Well, it's rent. Why did you rent your building? To use it? Generating revenues. Why does Walmart have stores? Generate revenues. And why do you have your office building? So you can generate revenue. Why do you have your warehouse? So you can generate revenue. Why do you have your manufacturing? No, I'm not. It's not revenue. It's a cost of getting revenues. What do I call the cost of getting revenues? Those are expenses. So it's going to be an expense because it's one of the many costs I incurred to get my revenue. Okay? Make that connection? And what kind of expense? How about rent? Seeing as that's what it is. Everybody good? We've done all of them. So how do you do 10? Yeah, add everything up. What would be a really cool way to do that? Now, you could do all these different accounts if you want, but oh my gosh, all it asks for is assets, liabilities, equity, revenue, expense, net income. What do you think would be a really good idea to do?
So to write it all down.
How?
It's hard. Write out the equation.
What we could do, what do you think, guys? That's interesting. Let's do this. Let's add another page. See what, yeah, beautiful. Okay, so a lot of when things actually work. So what now? I think group the assets together. I like that. Why don't we do assets? What else do we want to do? Liabilities. What else do we want to do? Yeah, maybe equity a little bit. And then what else do we need? Revenues and expenses. There are not going to be very many of those. But we're going to need them. And this is called postal. It's just copy. Now, really, you'd use an account for every single one, right? Because you want to keep track of each one independently. But on a problem like this, where it just asks for it in total, back with it, right? I'll put them all together. Why not? Huh? So, what's the first entry? A. I think you have 4,000 more cash, right? That's that one. You guys with me?
Yeah.
Notes payable, 4,000. Got it? It went up, didn't it? Credited. I stayed in balance, didn't I? My balance sheet balances. Land, 10,000. Contributed capital, 10,000. Put them in the right place, of course, right? Are we still in balance? Sure. I have 14 of assets, 4 of liabilities, and 10 of equity. Done. Still in balance. Oh. Equipment, 900. Cash, 100. Everybody staying with me on this?
Yeah.
This is not hard, is it? Okay? And the computer does it for you. You know, they really do this by hand. Million transactions. Yeah. Notes payable. Of course, you know what? You guys are going to program the computer to do it, right? And then know whether or not it did it right when all the numbers come out on a financial statement. So it's hard. Supplies inventory. Asset. Accounts payable. Liability. So you know, or you couldn't have done the journal entries. So cash. Asset. Accounts receivable. Sales revenue. Revenue. Okay. Note payable. Liability. Interest expense. I bet it's an expense. It says expense. Okay. Cash. Cash still an asset? Accounts payable?
What happened to the 8 for the
Expense. expense, debit
Oh, I didn't
liability,
see the,
credit cash. Got it? Okay, then where are we at? Accounts payable, liability, 300, right? Goes down. What else do we have? 300 goes down. What's going on? Hey, the stock market went down 364 points today. My wife's having a coronary. I can't remember retire anytime soon. Doesn't matter. You know what? When the stock market goes down, when you're buying stock, you get a really good bargain. That's good. When the stock market goes up, you got richer. That's good. Put your money in the stock market, leave it, forget about it. So you're going to spend it, and then you care how much it's worth. That's one of them. Yeah, probably some student. Those horrible people. All right. Thing buzzes in my pocket. I noticed it. Okay, anyway, so now what do we do? Where were we? The cash, I guess, on H. Make sure I do them all. 100, right? Account receivable. That's an asset, isn't it? 100 out. 100 in, 100 out. Doesn't matter, close to both. Okay. No entry on I. Salary expense for J. What do we get? 300 of expenses. Everybody agree with that? Cash. Asset out. Rent expense. 300. Everybody agree? And cash comes out. I barely left myself enough room. I didn't really. Now what would you do? I posted them all. I made sure that I wrote all the debits down and all the credits down, didn't I? Add them up. You got it. So go ahead and do that. And tell me what net income is. Tell me what total assets are, what liability is, what equity is. Go ahead. Did everybody follow why I did all those debits and credits? You know their assets, so you couldn't have made the journal entry. You know their liabilities, equity, revenue, expense, so you can't do the entries. So you can know, you know. It's easy. Okay, good. There you guys. That's all I asked for, right? What are the balance? This is not fine. It didn't anyway. No, they don't.
analytical. So far.
You hate it, so? Sorry.
Just gonna take your word and study good to know.
For the net income, you take your total revenues and
Right, guys,
expenses.
it's the same word. What's that?
For the net income, you just get your total revenue and expenses and apply the difference.
Of course. But you gotta get your equity. So what does net income do to your equity? Extend I have net income, what happens?
Oh, it adds.
It goes up, otherwise you won't balance, right? Because remember, we're making journal entries that are debiting cash and crediting sales. We're making journal entries that are debiting expense and crediting cash, or debiting expense and crediting payables. You gotta pick up the revenues and expenses, right? Which means the net income.
Oh,
Otherwise you won't be in balance at the end on your balance sheet. So you gotta pick up the current year income. So how much was assets, you guys, would you get? Anybody have it?
14,492.
14,499.
14,492.
492. Okay, so assets are 14,492, we think.
Can anyone confirm that? Yeah.
All right, okay. Yeah, and we're going to be able to tell anyway. Aren't we? Isn't that cool? Because debits have to equal credits. It's got to work. Okay, what are my liabilities? What was that?
4,300.
4,300 even? Does anybody know what equity is based on that? Oh, see, this is kind of handy, isn't it? Couldn't you take 14,492 less 4,300 and get the equity? Yeah, how much is it?
10,192.
10,192. Let's prove ourselves right. Okay? Contributed capital, what is it? 10,000. Everybody agree? The 10. What's the other one going to be? Retained earnings. And you know what, the retainers is just gonna be the net income because there were no dividends, right? What do you think, retained earnings has to be now? Which is exactly what net income is, it's their first year. It's gotta be 192, doesn't it? Wow, look at this. Isn't it nice to know what you're doing, huh? Well, let's see if that's true. What's my revenues? 800. What's my expenses? What is that up to? 608. What's 608 away from 800? 192. We are miracle workers. And if you get that one right, I'll be really happy for you. You have to get every journal if you're ready to get them right. Yeah.
I have a question. When adding up the assets, do you add all of them? All of them?
I add the debits
Okay.
and subtract the credits.
Oh, okay.
Or if you want, you can add the credits and subtract the debits.
Okay.
That's a joke. I don't care. Right? If it's an asset, add the debits, subtract the credits. If it's a liability, add the credits, subtract the debits. Huh?
Okay.
Thank you for putting in the time, you guys. Keep doing it. This is going to be so easy, or not. But everything's like that.
So in the liability, you add them up and subtract it.
Yeah, I think I do the same thing. This time I'd probably add the credits and subtract the debits, but it doesn't matter.
I didn't subtract, I just added them all together.
And that will make you have a ridiculous. Now, you're going to have a good teacher with you. Work hard. Work hard. And, oh, by the way, you guys, when you do a quiz, remind yourself it doesn't matter. Relax. Just relax. Take a deep breath, relax. You study for quizzes, tests, and finals as much as you're going to. Then you relax, take a walk, do whatever, and then go do it and just do it. It's just your job. Relax. Just relax. So when you're walking over here, right, clear your mind. Just relax. Don't worry about it. Big deal. If I ask you things you guys don't know, when you bother to show up with something like this, nobody else is going to know either. Don't worry about it. Always work.
Thanks, Steve.
See you later. Thank you. Yes, I better save it.